Let's start with the rising price of oil, which is pushing up the cost of living globally, with tensions on the Ukraine-Russia border not easing and also demand for oil rising. Markets are betting that we could see prices go higher, and we recently saw the price of oil hitting its highest level for 7 years, and this impacts everything from fuel to food bills. So today the members of the oil cartel OPEC and other oil producers will be meeting, and what will they decide in terms of production and what pressure are they under as well. If we have a look at the way oil has gone, you can see the general trajectory has been up and up and up. But as you can see here, this is the beginning of this year, and actually since the beginning of the year the price of oil has gone up some 15%, and many analysts are predicting $100 a barrel is not far away. Well, there are three reasons why. Firstly, there's now growing optimism about the speed at which the global economic recovery will gather in terms of overcoming and recovering from the pandemic. Secondly, geopolitical concerns, as well as the ongoing tensions between Russia and Ukraine, a suspected drone attack by Yemeni Houthi rebels in the UAE. That blew up 3 fuel tankers last week, so that's tensions in the Middle East as well. And thirdly, restricted supplies. According to research by oilprice.com, OPEC countries collectively produced 674,000 fewer barrels per day last month than they had previously agreed to. So let's look at the price of oil at the moment. As you can see, it's eked up a little bit. For a price of a barrel of Brent, you now got to part with $89.05 for that. Just to say, Hong Kong is closed for the Lunar New Year celebrations, so that number is when it's closed midday on Monday. And the Japanese market, the Nikkei, is trading today and is up some 1.7%. Well, let's talk this through with a regular on the programme, Cornelia Meyer. She'll give us her predictions, economist and energy analyst. Good morning to you, Cornelia.
Good morning, Sally. Great to be on with you.
So, do tell, what do you think OPEC Plus may decide today?
Well, they will certainly go up 400,000 barrels a day, a day for the next month, for March, which is they have agreed to do that from August last year through September this year. But they may go higher. Only so far they've done steady as they come, always $400,000 a day. Excuse me. That's that. But there's only that much that they can go up because their spare capacity is getting limited. And last month, as you said in your intro, they didn't go up quite by as much as they had promised to go up because there were problems in Libya and Nigeria. And yes, Saudi and UAE made up for some of that. But it's getting really tight when you look at sustainable spare capacity throughout this year.
So if things are getting as tight as you say, are we looking at $100 a barrel in the near future?
We might well do. So they're getting as tight as I say in terms of spare capacity. However, there is still the US that can come back. There's the shale oil that can come back, and at these prices, they probably will come back at some stage. They're disappointed in coming back. Then we have the Iran nuclear talks, and that could add another 1 million barrels or so. And there have been very positive noises out of Vienna as of late of that. So yes, there are some other supplies. There's also Brazil that could come in. But at this point, it looks tight. And at this point, markets are jittery. And, you know, we are in a very high backwardation. That means that the price for a barrel today is much higher than the price for a barrel in a few months' time. That's always a sign of a tight market.
And just talk us through how things are within OPEC and their other oil-producing friends, OPEC Plus as they are known. Is there dissension in the ranks? Because always there's this issue of compliance when they go ahead with new ideas on production levels, etc.
Well, you see, this time around, the dissension is different. It's always difficult when they have to cut production to make sure everybody cuts production because budgets of so many countries are really affected by this. But at this time around, you had Russia actually producing less than they agreed to produce. You had Nigeria, Libya, all sorts of countries producing less. So this time around, the job of the Deputy Prime Minister of Russia, Alexander Novak, and the Energy Minister of Saudi Arabia, Prince Abdulaziz bin Salman, is less saying pump less, but it's actually coaching people to produce all that they said they would produce. So things have changed quite a bit since half a year ago.
OK, they certainly have. Cornelia, lovely to see you. Have a good day. Cornelia Meyer there, joining us live from Bern in Switzerland.
Thank you very much indeed.